Welcome to the Fear and Greed Afternoon Report for Friday the 15th of July 2022. I'm Sean Aylmer. Every afternoon we've got the 5 stories that happened today that you need to know about. Let's jump into it. Story number 1, the S&P ASX 200 finished the day down 0.7% to 6,606 points. For the week, the bourse was off about 1%. The banks were hit hard this morning and then bounced back. Investors are worried about an economic slowdown, triggering a jump in bad debts. Commonwealth Bank and Westpac both ended the day slightly lower. ANZ was off 1.5%. It's been a rough week for ANZ. And National Australia Bank was slightly higher. The miners were down sharply. More of that in the next story. Coles, Woolworths, Wesfarmers and CSL all rose. One stock to fall today was fund manager Pendal, down 7.6% after it reported worse than expected outflows during the June quarter. Assets under management dropped by $14 billion to $111 billion, with about $4 billion due to investors pulling their money out. The rest was due to markets. The best performer of the top 200 today was Zipco, up more than 6%. Story number 2, iron ore prices fell heavily overnight, falling below $100 per tonne, taking the share price for the big miners with them. Back in April, iron ore was trading close to $140 a tonne. By the end of today, BHP was down 3.7%, Fortescue was off nearly 6%, and Rio tumbled 2.2%. In Rio's case, there was more to it than just falling iron ore prices. Its flagship iron ore division said it's suffering a surge in absenteeism and rising unit costs. Analysts said Rio's commentary suggests that the cost of exporting iron ore from Western Australia this year will be about 5% higher than previously expected. Story number 3, there's plenty of angst between the states and Canberra over the dumping of the $750 pandemic leave payment. The payment ended on June 30 and federal Labor has refused to extend it, blaming the former coalition government and also the need to start paying down debt. But New South Wales Premier Dominic Perrottet today said it was unfair of governments not to provide financial support so casual workers with COVID-19 can comply with public health orders and stay home when sick. I think he's got a point there. This will become even more relevant over coming months as COVID cases are expected to surge. The National Cabinet is due to meet on Monday to discuss the issue. Story number 4, a good news story. WiseTech Global is a global logistics software business. It had been a shared market darling and pretty much everyone agrees it's really well managed. But rising interest rates has hammered the company because many investors pin future earnings of tech stocks to rates. Higher rates means lower earnings. WiseTech's share price is down more than 25% since late last year. But today the company lifted its annual earnings forecast, pointing to higher sales and cost savings. It sent the group's share price up 7% before it settled back, ending the day 3% higher. And story number 5, China's economy grew by just 0.4% for the year ending June 30, a big drop from the 4.8% it was running at in March. The result was worse than most China watchers had forecast. It makes Beijing's promise that the economy will expand by 5.5% this calendar year seem very unlikely. Lockdowns around the country, including in major centres like Shanghai, culled growth. China, of course, is the world's second largest economy, and many countries in Asia are reliant on it growing. Australia is also reliant on China and will suffer via a drop in demand for commodities and other exports. That's it for the afternoon report for Friday, the 15th of July, 2022. Don't forget to hit follow on the podcast and find Fear and Greed on LinkedIn, Twitter and Facebook. Join Michael Thompson and I tomorrow morning for the weekend edition of the Fast 5 by Fear and Greed, the top 5 business stories you need to know in just 5 minutes. I'm Sean Aylmer. Enjoy your evening.